now. We're just getting people in from the waiting room. We're going to give it a few minutes as always as people get to log on and get set up here. And we'll just welcome everybody so far. We were expecting, I think Adrian said we had around 20 to 30 RSVPs. So we've got about 10, 12 people on here now. We'll give it a few minutes and get underway. We're just going to give it another couple of minutes. We have a few more people joining here for our Emergency Wage Subsidy 2.0 seminar with Andrew Seguin from Seguin Financial. So hello to those that have joined us, and we'll just get started in about probably 2 or 3 minutes here. We're expecting still a few more people to log on that we had from RSVPs. Good morning, everybody. We're a couple of minutes after 10 o'clock, so we'll get underway. And thank everybody for joining us today, particularly our seminar leader again, Andrew Seguin from Seguin Financial. We had quite an uptake in the height of COVID and the lockdown for businesses getting the first seminar that we had done about the different supports that were available. And I want to thank many partners, of course, Andrew being one of them, but our municipal partners as well. We have the United Counties of SD&G, the City of Cornwall, all of our local townships and municipalities were involved as well in sponsoring this and making it happen, getting the word out to businesses about how they can tap into some of those support programs. We connected with Andrew again, and he has been very gracious through the same partnership we had before to have him on and talk about specifically some of the changes that have happened to the emergency wage subsidy. So the CEWS 2.0 is a good title for this, because that's one of the programs that is continuing on as we get businesses reopening, as the economy gets back to some semblance of normalcy. Businesses are still looking for that support, and this has been a good program for businesses to help them get through 2020. I've always said what's the line that I use is 2020 is a year of survival for businesses. It's getting through the year, just surviving as best they can, and hoping that next year, 2021, we get back again some more semblance of normalcy, get back to a post-COVID world, subject to many of the health researches and different aspects that are going on. So I want to thank Andrew for doing this again today. Just a couple of housekeeping items. I'm going to turn my camera off. I'm working from my phone. So I'll let Andrew moderate the questions and answers as he sees best to fit in here. But also let people know we are recording this. So I'm going to upload this video to Facebook when we are done on my Facebook page. And I'm going to send it out in our community newsletter that we've got going through my Member of Parliament office. So if you have some businesses, if you're representing a Chamber of Commerce or a group, I see Tara from North Glengarry, I see Geraldine from South Dundas Chamber of Commerce. If you want to share this video with your members afterwards, we find, actually, Andrew and I were just saying, we find a lot of people don't tune in live to this, but they will go back, some afternoon, some evening when they have the chance to watch this or pass it on to a colleague in their office that actually does the accounting or administration for a program like the emergency wage subsidy. So without further ado, I'll pass it over to Andrew. I'll thank him for the information. I'll just turn my camera and volume off and look forward to the information that we're going to be sharing with businesses in Stormont, Dundas, South Glengarry today. Andrew.
Awesome. Thanks, Eric. Okay, so I'm going to share my screen. Just want to make sure you can see this. Okay. I'm also going to have a chat open. If you'd like to have, sort of questions. I just got to see where it is here. One sec. Chat. There it is here. Okay, perfect. Can anyone see my screen? Just type in yes, or just give me a thumbs up or whatever it is. I just wanted to make sure everyone can see my screen. Hopefully that's a yes from anyone.
Yep.
Okay, good. Perfect. All right, awesome. I'm good to go then. All right, great. So quick introduction. So my name is Andrew Seguin. I am the founder of Seguin Financial. It is a bookkeeping and tax firm located in Cornwall. I opened in January 2018. So it's been 2.5, going on 3 years. So it's been an exciting journey for me. And one thing I'm always proud to say is that I am one of the first fully paperless and cloud-based bookkeeping firms and SD&G, which just means if you ever went to our offices on Notre Dame Street, there's not much paper, not many cabinets. We're using a lot of technology, a lot of cloud-based solutions, and I'm very proud of that. Sponsored by SD&G County, State of Cornwall, all the local municipalities, and Eric Duncan. So as you said, this is a great partnership. I'm a big advocate of helping small businesses in our community. It's one of the biggest reasons why I started my firm, was to ensure small businesses had a voice, but also had proper accounting and bookkeeping services behind them. So we have an hour, 50 minutes now. I'm going to try to not speed through as fast as possible, but there's a lot to go through in this webinar. So let's go through it now. Specifically, the wage subsidy. I want to give an overview of what it is and where we're at today. The highlights, specifically the changes to the program. I also want to compare version 1 versus version 2. So we'll talk about what those mean and what that means for you as a business owner or as a government agency or whatever that means. And also I do want to talk about the other funding updates that happened the last few months since our last webinar in early April, talking about the emergency loan, talking about the rent assistance, and the emergency response benefits, the CURB or the CERB, however you want to call it. A quick legal disclaimer is that it's not intended to be legal advice, so always keep that in mind. Every business has its own unique characteristics, and this webinar is a high-level overview of these programs. So just keep that in mind. And please, I always recommend to consult with your own bookkeeper and or accountant. If you have both, great. If you only have one, talk to them, see if they can help you out. These programs are very difficult to navigate, especially the wage subsidy, and you don't want to be on the wrong end of the stick here. So you want to make sure you're on side and doing things properly. And as always, this situation is extremely fluid and is changing on a regular basis. So what I talk about today on August 20th could be different in a week from now. Typically at this point, it's not as fluid as it was 4 months ago. Things are changing on a daily basis. I was having to watch the news for 2 hours every morning to figure out what's going on. Thankfully, that's not the case now, but things are still changing. So just keep that in mind. All right, let's get into it. So I'm not going to talk about the historical of wage subsidy because we're 4 months in, and there's tons of webinars and resources available out there. So I'm going to talk about where we're at today. So periods 1 through 4 is version 1.0. So when I'm talking about version 1.0, this is the period specifically we're talking about, March 15th to July 4th. So keep that in mind. So we are now done this version 1.0. So we are now in version 2.0. This is periods 5 through 9. So July 5th to November 21st. There's also a potential extension to December 31st, which is period 10. But right now they've only approved up to period 9. But that is one of the things I can talk about changing. So a month from now, 2 months from now, we might get a period 10, maybe not. The federal government budgeted, and this is where we're at today. The government budgeted and planned to spend $76 billion by July. So when they implemented this program, they had a set number of dollars they wanted to spend in regards to helping the economy during COVID-19. Well, as of the August 16th, they only spent $27.5 billion or 36%. So this is where version 2.0 comes in. We had so far 840,000 approved applications through the SUTH program. And you can see the breakdown here of what application value they are. So 800,000 of it is less than 100K. There's a few that over 5 million you can see there. And the reason why version 2.0 came into effect is because they realized that they were not going to hit their mark of the $80 billion of spending. So they wanted the way to increase the broad stroke of businesses to be eligible for the wage subsidy. More businesses that can apply, more money they can give out. This is money they've already set aside. Like it's already been approved, it's already been done. So they're now trying to get that spending up as fast as possible because they've already set the money away. So this is where version 2.0 comes in effect. So highlights, okay? There's a few important parts about 2.0 that you really need to take into consideration. So the wage subsidy used to be a pass or fail method. As in, if you didn't get your revenue reduction, you failed. And you didn't get any wage subsidy at all. So if you had a less than 30% revenue reduction, primarily between April, May, and June, you would have failed the eligibility and received no subsidy. Not bearing, the deeming period rules and everything else, special elections, but your month of April, if you had a 25% revenue reduction, you essentially, quote unquote, failed, and you did not get any eligibility. For periods 5 and onwards, so 2.0, any revenue reduction is now eligible for some wage subsidy. So keep that in mind as we move forward, is that even with a small revenue reduction of anything past 0%, you are eligible for some wage subsidy. Now, it's going to be up to you to decide whether you want to do it or not, right? If you only had a 2% revenue reduction, what does that mean in regards to wage subsidy? Maybe 3%. What does that mean to a dollar component? $400. Do you want to spend a few hours to get $400? Maybe. If you can get charged for it from your accountant, maybe you don't want to do it. So you can decide that, but periods 5 and onwards, or version 2.0, any reduction can qualify for some wage subsidy. There's two components of version 2.0 in regards to revenue calculation. Before, it was just straight up comparing to 1 month to a prior month. So now there's a base subsidy is what they're calling it, and a top-up subsidy. So your base subsidy is still your 1 month comparison as normal, so that hasn't changed. But your top-up subsidy, which is a brand new formula, of course it is, because they just wanted to complicate this a bit more. And this is the biggest discussion point between a lot of my colleagues across Canada, is that this is very complicated. We thought version 1 was quite complicated. It took us a good month to get a good handle of it. This is beyond complication. This is complex to an absurd amount. So there's a top-up subsidy, which is any revenue reduction past 50% on a 3-month average reduction has its own special formula. I'm going to talk about that in detail because it's very important in regards to calculating your wage subsidy. Essentially, there's different rules if you're over 50% compared to less than 50% revenue decline. So that's essentially the summary of this, is that there's different rules if you're more than 50% decline or less than 50%. One important thing, I think, out of all this whole webinar, I want to make sure you understand this part the most, because I think this will get you the most amount of money at the end of the day. Periods 5 and 6 have what's called a safe harbor rule, which means they're saying, they essentially said this: we know we're implementing this end of July. We're already in period 5. We're almost done period 5. We're going to allow you as a business to either apply for version 1 or version 2.0 based on your rules. As in, if you have a better wage subsidy through version 1.0, you can use that as your calculation. So remember, in version 1, it was 75% wage subsidy. Done. It wasn't this odd calculation. It was, oh, you had a revenue reduction of 30% or greater, you get a 75% wage subsidy. It was pretty straightforward in that sense. Version 2, which we're going to talk about, has different calculations, as I mentioned, to the base subsidy and the top-up subsidy. What this safe harbor rule is saying is that you can choose whichever version is more beneficial for you. And that's super important because version 1 is 75% wage subsidy. In version 2, you might have only had a 40% wage subsidy. You can choose the greater of for periods 5 and 6. So out of this whole webinar, really keep this in mind, because this might be helpful for July and August when you're doing your wage subsidy calculations. For periods 5 and onward, something else that's really important. There was something called a baseline remuneration back then for periods 1 and 4, which was you had to calculate baseline between January 1st and March 15th. Now for periods 5 and onward, it's actually only relevant for non-arm's length employees. When I say non-arm's length employees, I mean people like the owner, the shareholder, family members of the shareholder, family members of the owner, whether it's a child, a spouse, a nephew. Those are non-arm's length employees, as in they are somewhat related, if not related, to the owner of the organization. So you don't have to calculate baseline remuneration anymore for actual staff, real staff, as in arm's length staff members. So if you hire somebody in July and August, if you're bringing somebody back on who was working in February or whatever else, you don't have to calculate your baseline remuneration for them anymore. But for non-arm's length employees, you still have to calculate that baseline calculation. There was a stipulation in version 1, which was if you had an employee without remuneration for 14 or more days, they were actually ineligible. This was a big one that flew under the radar for a lot of businesses. And it was super awkward because you were having to hire employees or rehire employees at a certain point in your month to ensure you're getting subsidized for the wages. So it was super clunky, it was super awkward. So for instance, let's say we're talking about a period between week 1 and week 4. If you hire them on week 3 and they work 2 weeks out of that period, they're actually not eligible for any wage subsidy, which is super weird because at that point they were not working for 14 or more days. So now they've excluded that, it's gone. So periods 5 and onward, they've simplified that calculation. Essentially, what I'm saying is if you have a casual employee that works only 3 days out of a whole period, they would be eligible for the wage subsidy. And deeming rules are different. So we're gonna talk about that in more detail, but now you're looking back instead of looking forward. So I will talk about that in 2 specific slides because that's also an important rule. And furloughed employees also have different rules. Of course they do. So furloughed employees are workers or employees who are getting paid but not actively working. So it's somebody who you essentially quote unquote laid off, but they are still employed through your payroll. They're now going to have different rules, which I'll briefly talk about that. Again, if you have any questions, feel free to ask away. If you also want to email me after the fact, is it more of a private question? I'd be happy to help out and do what I can. All right, hopefully I haven't lost you yet. I know it's a doozy. Okay, this is all important. That's why I'm having to go detail because it's like I can't miss anything because every little thing is so important in regards to the calculations of the wage subsidy. So prior reference periods, this is the definition of having to compare your revenue. So anytime I'm saying you had a 35% revenue reduction, using one of these reference periods, this is what it's referring to. So you have the same month comparison as in May 2020 to May 2019. That is one of the reference periods, you can use. There's also a second reference period you can use instead, which is the averaging method. That is comparing your current month to the average of January and February 2020. And you can use this method if you were not carrying on business on March 1st. That's supposed to say 2020, by the way, not 2019. Actually, no, that is right, sorry. Or if you file an election. So there's an election, a little checkbox you have to fill out saying, I actually don't want to use the month-over-month comparison. I want to use this averaging method. Little checkbox you got to fill out when you're doing the application, but they will allow you to use this method. For periods 5 and onward, you actually file a brand new election that sort of restarts this method. So, for instance, if you remember back then, is that if you picked one election, as in if you picking the averaging method, you have to stick with that averaging method. You can't flip-flop back and forth. You can't go, all right, period 1, I want to use the month-over-month, a year-over-year comparison. And then period 2, I'm going to use the averaging. You couldn't flip-flop. You have to stick with one for periods 1 through 4. But periods 5 and onward, they sort of restart this election. You can now choose again which election you want to use. But you have to, again, choose that election for periods 5 and onwards moving forward. So periods 5 is super important. We're actually delaying this for our clients. And I've told my clients this, is that we're actually waiting a bit longer than normal. We were pretty active in regards to the wage subsidy applications for our clients. We've been handling it for every client of ours. And what we were doing for periods 5 is that we've been taking a pause because we want to make sure that we can get the most amount of subsidization for our clients. We're going to be patient, wait, see which election we think can be beneficial for them. Right? We're having discussions with our clients, asking them what they think is going to happen next few months for their business. So we're having deeper discussions because, again, when we choose an election period 5, we have to stick with that election. And they might be more beneficial for the averaging or the year-over-year comparison. So I mentioned periods 1 through 4 can be elected differently than periods 5 onward. Baseline. The major difference, as I mentioned, is that you had to look at the baseline between January 1st and March 15th for all employees. Arm's length, non-arm's length, you had to do that for everyone. In version 2, you can actually opt to use a special election to calculate a different baseline on an employee per employee basis. But this is only relevant for non-arm's length employees. Let me give you a quick example. Let's say you had a shareholder on payroll in 2019, okay? Let's say they were on payroll for 2 or 3 months in a certain time of the year. If you do a special election, if that payroll, those wages were paid out to that shareholder in this specific period that is eligible, and you didn't pay them at all in 2020 so far, it's possible where they can actually now get subsidized for their wages if you use a special election. It's very complex. I didn't put it on here because you only have an hour, but just keep in mind that there are special elections that you can use on an employee per employee basis for non-arm's length employees now. In version 1, it was a limiting factor. Essentially, if you know, their baseline was back then $1,000, and now you're only paying them a certain amount. It was a limiting factor in regards to how much you were able to get subsidized for, especially for non-arm's length employees. So now they've, like I said, removed that baseline component for arm's length employees. Eligible employees, essentially the major update is that, as I mentioned, is there's no exclusion anymore for employees who had no remuneration for 14 or more days in a specific period. So now you can essentially hire casual employees. If your industry, your business has casual part-time employees, you don't have to work around the schedule anymore as, okay, I got to make sure they work 14 days or 15 days in this period so I can get subsidized. You don't have to do that whole rigmarole anymore. You can kind of stick with bringing them on 3 days a week, 2 days a week, and not have to do the whole calculation anymore. So it simplified the method. I think it's the only thing they made that's really simplified out of this whole new process. Version 2 is this little part here, which is kind of sad, but it is what it is. Eligible entities, if you remember back then, there was this whole issue where some entities were not eligible. Essentially, they just kept that forward. So they modified it at one point, I think in sometime in April or early May. At the end of the day, if you were eligible before, you're still eligible now. That's the best way to look at it. So essentially, if you were eligible for version 1, you're eligible for version 2 as well. Have a quick sip of coffee. All right, still with me? Hopefully no one's fallen asleep yet. I know this is sometimes a snooze fest, but super important for your business. Furloughed employees. I mentioned furloughed employees are essentially individuals who are getting paid, but they're not actively working. So not even working from home. I mean, like not working at all. They're not even participating in any type of work. So there's different formulas. Essentially, periods 1 through 4 is no change, but there's a special rule for periods 5 to 6. Essentially, the special rule is that you must have had a revenue reduction decline in the current period or in the prior 3-month average calculation. It's essentially, if you follow that method, you would get 75% wages paid, just like the old method. But periods 7 and 9 is a special rule that I'm not going to talk about. It's, again, pretty complex. It's very specific, and it might not be relevant for you. But if it is relevant for you and you want more information, send me an email, and I'd be happy to help you out a little bit further. Again, we only had an hour, and this could in reality be a two-hour webinar, but that's not fun for anyone. All right, demon rules. So if you remember, a demon rule went like this. If you were eligible for one period, you qualify for the next, right? That was super important, right? Because if you had your March revenue reduction of 15%, because if you remember, it was 15% in March, even if April only had a 10% reduction, you were eligible for April. Now, doesn't mean you're automatically eligible for May. If you get one period, you automatically get the next. So that was super important because it allowed you as a business owner to essentially schedule and plan, whether you can take on your staff back, whether you can bring more staff on, and hire, maybe rehire or bring on new hirees, depending on your industry. So this demon rule was super important for a lot of businesses because it helped them sort of plan a little bit, right? It's the worst feeling is you bring new staff on because you got subsidized for 1 month. Next month it's gone. So you bring all the staff on, you're incurring more costs. Your revenue didn't really increase much. Then you get hit with no subsidy. that will kind of suck. So what they did is that they said, if you got one period, you automatically qualify for the next. Well, in version 2, this deeming rule is still in place, but it has been modified. So remember, before in version 1, if you got the one period, you automatically got the next period. In this version, you are deemed to use the prior revenue reduction for calculations in your claim when it's beneficial. So if you, and I'll have an example of this too, next slide. So essentially, if it's beneficial for you, you're always deemed to be able to use the prior month's revenue reduction. You don't automatically qualify anymore. That's gone. So before, you know, like I said, you're always looking ahead. Now you're looking back, as in, okay, I'm in August. I had a revenue reduction of X. What was my July revenue reduction? Then you can look at those two and see what's more beneficial for you. That is your deeming rule now in version 2. So you don't automatically meet. Oh yeah, this is also to the, I'll talk about that in a second. So you don't automatically qualify anymore. So before it was, oh, you qualify this month, you get next month, done. Version 2 is you have to take consideration what your revenue reduction was, because that's going to be used for you in regards to the formula. There's a top up, and I'm going to talk about that in detail, but to keep this in mind is that when I'm talking about the base formula and the top up formula, you don't automatically meet the top up with deeming rule. So essentially, you must qualify for each period individually for a top up, because it's a different formula and it's a different rule. There's a base as a top up. For the top up, you don't automatically qualify with the deeming rule. So essentially what I'm saying is you always have to do your deeming rule. You always have to do your top up formula, no matter what, every single month and see if you qualify. So just keep that in mind. You always have to use your top up formula, which I'll talk about shortly. Here's an example. So let's say you're processing August. So you're in period 6 right now. If your revenue decline was 25% in August, but your July revenue decline was 38%, as your August revenue is less than the prior period, you can use the July revenue reduction pursuits calculations. So you are deemed to use the prior month if it's beneficial for you. So in this one example, your revenue reduction was greater in the prior month, you're now able to use that prior month. That was essentially the same thing in version 1, but because it was a pass or fail method, that's essentially how people thought about it. Like, oh, you got this month, you get next month. And it's the same thing though. It's essentially, if you had a 30% revenue reduction in April, we got May, no matter what. And the reason we got May because you had a revenue reduction of 30% or greater in the prior month. So it's the same thing, but it's a different mindset because you're not qualifying automatically now anymore. There is a percentage formula that we're going to use in regards to calculating your wage subsidy. So this is super important in regards to helping you out, because then you can start mixing and matching. As in, you know, if you're in July, you had a 20% revenue reduction, but your June was 33. Well, because of the safe harbor rules, as I mentioned, you can actually still qualify for 75% wage subsidy in July. And I'll also talk about that in more detail. Okay, so let's talk about revenue reduction and you know how we're going to go through this. So as I mentioned a few times, version 1 was a pass or fail. So 30% reduction was essentially your baseline for formula calculations. Except March had a special 15% component, but periods 2, 3, and 4 was 30%. In version 2, there's a sliding scale. So as you start moving forward into the periods, you get less and less and less wage subsidy. So every entity with a 1% revenue reduction or greater will be eligible for some wage subsidy. So as I mentioned, you know, depending on where you fall under this revenue reduction, you might want to still apply for the wage subsidy, even if you're only getting a few $100s. If you're doing the work, or if you have an accountant or bookkeeping firm like Seguin Financial who's doing it for you, why not? Why wouldn't you do it, right? So for us, you know, we haven't been charging our monthly clients for this work. It's been part of our scope per se, even though it's no one can predict COVID. What we've been doing, we've been handling all this work for our clients, essentially quote unquote free of charge. And what we're going to do is, even with a client only had a 3% revenue reduction, we're still going to apply for them. Because even a few $100, Well, that helps, right? It's like helps pay for some materials, help pay for their rent, whatever. Helps them keep them afloat a little bit longer. That's great news. So you have to essentially determine two different revenue reduction components, your base and your top up. So I mentioned before, you have two different parts of your formula in regards to revenue reduction. There's a base component and there's a top up component. So let's talk about that. So top up. You are going to use the prior or the previous 3-month revenue reductions for an average in regards to your calculation. So if you're in July, what this means that you're going to look at April, May, and June. You're going to take those revenues together and you're going to compare it to the prior 3 months of the prior year or the averaging of January and February 2020. So what that means is if you had a 10, 20, and 30% revenue reduction, your average is 20%. That's your figure. That's your revenue top up in regards to calculations. And you can use that 20%. You can compare it to either your 3-month year-over-year method or the averaging method as you are deciding to do. But you only use this, it's also important to note, you only look at revenue top-up formula, as in you're only going to move forward towards this formula if your reduction is 50% or greater. When you do your 3-month average and you find it's 23%, don't bother continuing on. You are not qualified, you're not qualifying for a revenue top-up. So your revenue top-up formula has to be 50% or greater, okay? It has to be greater than 50% on the prior 3-month calculation. And how it works is that you will get an additional 25% top-up subsidy. So that's essentially how it's going to work for periods 5 and onwards. That's your maximum. If you have 70% revenue reduction, you're getting a 25% top-up. But if you're falling between 50 and 70% revenue reduction, you're going to do a special formula. And that's 1.25 times the difference. So if you had a 60% average reduction over 3 months, 60% minus 50% is 10%. 10% times 1.25, 12.5%. So there's a special formula that you have to do if your revenue top-up is, or your prior 3-month average is greater than 50%. But again, you don't have to do this formula if you are not over greater than the 50%. But I recommend in checking no matter what, because it's super weird, but you can be actually not eligible for the base subsidy, but eligible for the top-up, which is super strange, I know, but it's possible. And I've done some examples where that is possible. So always check your prior 3-month. I would say please do it because there could be some subsidy available for you, even if you don't think there's some available. So the maximum percentage, which is 25%, is achieved when you are hitting 70% revenue reduction. And if you're more than 70%, you're not getting more. You're essentially, you're maxed out at that point. You are getting your 25% top up. Okay, quick water break. You can see a lot of numbers here. Don't be overwhelmed. I'm going to break this down and then simplify it a bit further. There's 2 extra slides that gives you dollar figures instead of percentages. But I just want to quickly note this. This is how complicated it is. There's a lot of moving parts for periods 1 through 4, then periods 5 through 6, then periods 7 through 9. There's a lot of moving parts. This is why I recommend to talk to your accountant or bookkeeper or somebody else, somebody who specializes or can at least assist you, because there could be a lot of money on the table potentially for your business that you're missing out on. The emergency loan was pretty straightforward in the sense of use your $40,000, whatever. The serve was quote unquote pretty straightforward. This is super complicated. Very, 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 very complicated. I just highly recommend to please talk to somebody. If you're even somewhat unfamiliar or uncertain of your calculations, just have somebody involved. You do not want to be on the wrong side of this. There are some significant penalties, fines. There's even potential jail time if there's negligence. I don't see that happening often, but just make sure you have clean documentation, clean reporting, and your calculations are correct and accurate, because there's a lot of wage subsidy available on the table if you choose to go down this method. So you essentially going to look at this column here and say, all right, which period am I in? All right, we're in period 6. Okay, did I have a revenue reduction of 20%? Well, I don't fall anywhere here, so nothing. Okay, and you got to look at the prior month. What was it there? Well, again, you got to take that into consideration. But you essentially look at this and say, what do I fall? Am I over 50%? Am I under 50%? You know, what do I fall under? So in periods 5 and onwards, even 10%, you're getting some wage subsidy. But you can see in the prior periods 1 through 4, it's not available. So even a revenue reduction of essentially less than 30%, you were getting nothing. So look at this, okay? And then I'm going to look at the next slide. And you're going to see some dollar figures involved with this. So this is the maximum subsidy available, essentially, okay? Before, there was a 75% sort of cap. Because there's a top-up component involved, you're actually eligible to get 85%. So I'll go back one slide. There's a 60% base and there's a 25% top-up for periods 5 and 6. You're now eligible potentially for an 85% wage subsidy for periods 5 and 6. So if you have a revenue reduction of 70% or greater, so higher than 50% of baseline and then 70% in regards to your prior 3-month calculation, you could be eligible for $960 a week maximum subsidy. That's helpful, right? If you are a business that's been significantly impacted by COVID-19, through this version 2.0 method, you are now eligible for more wage subsidy than you were through version 1. So keep that in mind, is that your wage subsidy could be increasing depending on how hard hit the COVID hit did for your industry. But it's 847, essentially still eligible for your revenue decline if it's more than 30% for periods 5 and 6, and you have different formulas involved depending on your percentage. So you see the 1.2 under column 4, which says revenue decline less than 50%. This is 1.2, 1.2, 1.0, 0.8, 0.6. This is called a factor. Essentially, as time goes on, it's a sliding scale. As time goes on, your base subsidy gets lower and lower. So you can see, yeah, your revenue decline, if it's over 50%, the maximum subsidy, which is the base, goes down. So your maximum subsidy as periods go on will get lower and lower and lower. As before, it was 847, 847, on 847, 847. By period 9, your max subsidy was only $509. So when you're doing any planning for cash flow or scenario testing, keep that in mind, is that your wage subsidy maximum is now decreasing from periods 1 and 4. So that factor 1.2, 1.0, 0.8 is essentially determining your base max subsidy, and that's going to go down. But your max top up doesn't decrease. So that 1.25, as I mentioned back here, that 1.25 doesn't change. So that factor for your top up doesn't change. 1.25 will stay that same number for periods 5 and onwards, but your base does decline from 1.2 downwards. This is for businesses, a quick chart for businesses who are less than 50% revenue decline. This is the maximum subsidy you could be looking at getting in regards to that. Obviously, not bearing safe harbor rules. I'm just looking at this period specifically. So doesn't matter what you got, I'm saying on the prior period, just in period 5, you're eligible for $542 as your base subsidy maximum on a 40% decline. Then you can see what it looked like. You get 30% decline, 20, 10%. So it just gives you a quick snapshot in regards to what we're looking at for dollars, depending on your revenue decline, if it's less than 50%. So I just wanted to give you some examples of what this looks like. So if you're at 20% decline in period 8, at most, you're going to get $181 per employee. So it just gives you a quick snapshot. It might help you in regards to planning, bringing employees back on. So just keep that in mind. Some other notes that you should definitely take consideration. This is super complicated, but there was a cash versus accrual method you can choose, which means in Canada, we run an accrual system, as in if I invoice you June 30th, but you pay me in July, I'm showing my revenue in June. I don't care when you pay me, I'm showing my revenue when I bill you. Cash method, which is typically for farmers and fisheries, they essentially record the revenue when they got paid. For the SUS, they actually allowed you to make an election saying, I actually want to use the cash method instead of the accrual method, which is super weird because in Canada, I said, we've always worked on an accrual method. So having businesses choose was pretty confusing for them. Thankfully, our accounting system that we use for our clients actually allows us to flip-flop between cash and accrual method. And the reason why I say this is actually that there was about 10% of our clients that were not eligible in the accrual method, but they were eligible in the cash method. And we made an election for them to use the cash method. And the reason why they were eligible in the cash, and this makes sense when you talk about it, COVID impacted a lot of businesses across Canada. If I bill you in June, but now you can't pay me until October, well, I'm showing revenue in my books for cash I'm not getting until 5 months later. So I can show the revenue now when I hit my bank account in October as opposed to June if I'm using the cash method. So if you have an accounting system in place, which I highly recommend, and I do webinars on that all the time, take a look at if cash or accrual method is eligible in regards to your calculations for your business. But one thing to keep in mind is that whatever method you did choose between periods 1 through 4, you do have to stick with it. So it's not like the other version 2.0 revenue reduction comparison. You can essentially restart your election. You do have to stick with that. But if you have not done any wage applications at all for periods 1 through 4, and you're still waiting on more certainty or more information, your accountants hasn't done it yet because they're waiting on more information, whatever it may be. Depending on your specific business, using cash method might be beneficial. I say might because you have to talk to your accountants or look at your own financials if you are that type of like business owner that does your own bookkeeping, and well done for you. Asset sales. So this is a very interesting topic and very complex, but if you purchased all or substantially all the assets of a business, let's say in March 2020 or later, you actually might be eligible to use a special election to claim the wage subsidy. If you remember, I mentioned is that you've had to be operating prior to March 2020 to be eligible for the SUS. As in, if you were a brand new business that started on March 1st, well, you weren't really affected by COVID-19 is what they were saying, because you didn't have any baseline revenue to calculate off of. You're a brand new business. You weren't really impacted by COVID-19. But if you bought a business or bought the assets of a business, essentially, 90% or more, you can actually use a special election to take their revenue in regards to your comparison. Because what I mean by that is if you bought a business in April 2020, let's say, well, you don't have any baseline revenue to compare to. You didn't exist in January, you didn't exist in February, you didn't exist in March. You're a brand new business on paper, a new business number, new payroll number, new everything. You have no revenue compared to. You can use a special election to use their revenue. You have to work together. If they're still existing, if their business is still up and running, you have to use an election to work together. If they're not, if their business is closed, you can self-identify the election yourself to the Minister of, I think Minister of Revenue, Minister of Finance, or it might be CRA. This is brand new. So that's really important because there was some clients who actually incorporated coincidentally in March. So they took their sole proprietorship and made a new corporation in March, not knowing that COVID was going to hit or thinking COVID wasn't going to have that much of an impact. And now their corporation has no revenue comparison. Well, this special election will allow you to potentially use that special election to look at prior revenue on your sole proprietorship. Pretty complicated, I know, but this helps you out, great. And also applications must be made by February 2021. So you can wait. If you are not hurt for cash and you want to wait for the most amount of wage subsidy available to you, it is definitely beneficial for you to wait. Get all your ducks in a row, get all your financials really concrete, have a deep understanding on which elections you can use, in which periods, cash versus accrual, averaging versus year over year, base top up, all those things. You can wait until February 2021 to actually make all your applications in one shot if you want. So don't rush it if you don't need to. But if you're really hurting for cash, well, maybe it's a good idea to maybe do periods 1 through 4. And then you can wait for periods 5 and onwards. Just a recommendation. Other COVID-19 updates, obviously it's not just wage subsidy that is in effect. There's a bunch of other things. One is the emergency business account. This one had a lot of different revisions throughout the last 5 months. Specifically, it was $40,000. You needed $40,000 of payroll in 2019. Okay, then they made it down to $20,000. Great. Now they're saying with no payroll, you can still apply for the emergency business account. Unfortunately, this one has more requirements. So if you don't have any payroll in 2019, if you were a sole proprietor without payroll, if you're a corporation that didn't have any payroll, dividends, or anything, then this one has more requirements. And you have to prove eligible non-deferrable expenses. So before it was, oh, here's your $40,000. You have a T4 summary of 23,000. Here's your 40,000. Done. You didn't have to prove anything. You have to prove. Now you're supposed to use the money for non-deferrable expenses, but you didn't have to prove that you had at this time $40,000 in non-deferrable expenses. This has received a lot more scrutiny because there's harsher requirements compared to the payroll stream. And when I say non-deferrable expenses, I mean items such as rent, property tax, utilities, insurance, materials, items that you cannot defer on, right? These are items that is happening through your business no matter what. If you're looking to buy a brand new asset like a truck, that is deferrable. You can wait a few months to get a vehicle. You can wait a few months to get a new piece of equipment. But these are items that are happening no matter what. So rent, you can't avoid that. You are going to get charged rent, and it is what it is. It does require more support and documentation to complete the application. As I mentioned, it's not essentially it was a pass or fail. You had $23,000 of payroll, you passed. CRA is not going to validate that in a sense of requiring documentation for expenses. In this new version, this new stream, CRA will actually be involved and they will assess your application. So it's not automatic pass or fail. They will look at your documents and verify whether your expenses are eligible or not. So it is harsher, and it's unfortunate because a lot of businesses who fell on this stream are getting hurt the most. Rent assistance, or called the SECRA, has been extended to August 2020. So that is keep moving forward, and will it move past August potentially? I doubt if it stops at August, but who knows? The CERB is being transitioned to EI for September 26th. So they're removing the CERB, or the emergency response benefit, the $500 a week or $2,000 a month, however you want to call it, and that's going to be transitioned to EI. They have assured the nation that no one's going to be left behind. Everyone will be caught under the EI umbrella. If you were getting the CERB and you still need the CERB, you'll fall under the EI, and I also believe they say that they might even pay the comparison to the CERB as they were through the EI. It's also the RIF, Cornell CFTC. If you're looking for loans or funding, I believe, I could be wrong. I think I saw Leslie on here. I don't know if this is still active. Last time I checked, it was. So it's a good loaning program through the CFTC in Cornwall. I would definitely check them out. If you're not eligible for the CEBA, the emergency business account, the loan, as I mentioned, because for whatever reason, this might be an alternative approach for you. Digital Main Street, great program. They are getting increased funding, so it allows you as a small business owner to get an awesome website built. There's some content they can help you out with, marketing, website, Shopify, all that kind of cool stuff. It's really good for businesses who are looking to modernize their business, build a website, build a presence. I would definitely check out Digital Main Street because I think it can help your business out. All right, that's pretty much it for me. I know that's a lot to take in. There was a lot to absorb, and I made a 4-page, 5-page cheat sheet that talks about the wage subsidy in detail. It looks something like this. So it kind of gives you some more information in regards to the base calculations, the top-up calculations. I sent to my clients and a few of my contacts and colleagues, but if this is something you're interested in having, I'm happy to give it to you, no problem. Just send me an email here, andrew@seguinfinancial.ca, and I'd be happy to send this out to you. It's something I spend a good amount of time on building, but this is information I want to give out to the community. I want your business to keep moving forward, keep pushing along, and if this wage subsidy webinar helped you out, then I've done my part. And as always, check out our website, seguinfinancial.ca. If you're looking for assistance on anything, whether it's bookkeeping services, accounting services, you just want a good team behind you, reach out and we'd be happy to maybe accommodate you. And again, thanks for Eric, the team, Adrian, everyone else to having me on board. I love doing these webinars. I love having a voice to the business owners in Cornwall, SDNG, Akwesasne, and anytime I can help, I'm always happy to jump on board.
Awesome. Well, thank you very much, Andrew. I've just got my my audio on, but if anybody has any questions, they can either type them into the chat or through the participants button, they can raise their hand, and we'll just keep an eye to see if there are any questions. There's certainly a lot of good information, and I think the fact we're recording this is going to be good because I know myself, I'm going to go back and watch a few different sections again just to make sure I'm getting the gist of it right as we go through this and passing information along. So if anybody, again, has any questions for Andrew while we're on here, please use the chat feature or the raise your hand feature.
And any question, it could be wage subsidy, it could be CEBA, it could be something else. If I don't know the answer, I'm happy to do some research and get a few. So. Sure.
Actually, I got one by email from a local business that couldn't participate today,
sure.
But it was, I'm just going to read it out here from Stephanie. I've received questions from employers who didn't take advantage of the wage subsidy and whose employees were on EI or CERB, but are now thinking of moving to the wage subsidy program. Is there any ability to do that retroactively? Now, I know you addressed that about going back a little bit, but maybe just to rehash some of that again about the possibilities of retroactivity on this.
Yeah, great question. So we actually did that so when this wage subsidy hit, we actually spoke with every client of ours and we had a discussion saying, do you want to retroactively bring your employees back? And that option is still available. So you can actually even go back as of March 15th. The only thing to take into consideration is that if they were receiving the CERB, so those employees specifically, and you retroactively pay them back, there's a good chance that they're going to have to pay that money back. However, it is possible, depending on their baseline remuneration, that their wages could be higher than what would be receiving through the CERB. And that was a big one. And actually happened for a few of our clients, as in, instead of only getting $500 a week, if they were getting employed and getting through payroll, through the wage subsidy, some of them were getting $600 or $700 a week. So they ended up getting a good chunk of change over and above what they were going to get over the CERB. The only thing they have to keep in mind is that they have to get the CERB back because at that point, they received more than $1,000 in a 4-week period. So they do have to give that money back, but they won't be taxed on it, but they'll have to give it back to CRA, the federal government, when they go through that whole process of, I guess, reconciliation. But yes, absolutely. You can retroactively rehire your staff for period 1, 2, 3, 4, whatever you want, or even bringing them on now and forward. It's something I actually highly spoke about to a lot of business owners in SDNG because the intent is to be back up and running super quick, right? It's like if someone's off for 2 or 3 months and you have to re-onboard them, retrain them, do whatever you have to do, it takes time and it takes longer to get back up and running. So if they were still employed, still through payroll and everything else, you can essentially start on day 1 super quicker. So yes, the answer is you can absolutely retroactively rehire essentially your dismissed or on leave or whatever staff from March 15th onwards and retroactively pay them through payroll and get subsidized for that. Just keep in mind, they might have to pay back the CERB if they received over a certain limit per month.
Perfect, thank you. I don't see any other questions or hands raised here, Andrew. So I think what we'll do is we'll wrap it up. We're right under an hour, which is great. And thank you very much for this information. And again, a reminder to everybody, this will be online on Facebook. We'll have a YouTube link as well. And any follow-up questions or issues you have with CRA with this program, please contact me or my staff rather at our office. They're the ones that do all the tough work here. I'm just here for show. But my office in Cornwall, my staff are happy to help anytime on issues of CRA, Service Canada, whatever it may be. So with that, thank you very much, Andrew, and to our participants. Let's keep in touch and we'll go from there. Have a great day, everybody, and thanks again for joining us.
Awesome. Thanks, everyone. Have a great afternoon.
Take care.
Bye.